The latest housing finance figures released by the Australian Bureau of Statistics show that the slashing of the cash rate has had an immediate impact on home loans. But the results were a mixed bag, and the number of owner-occupier approvals undershot expectations, while there was a strong gain in investor loans. So to help understand what these figures mean and the implications on our property markets, let's have a chat with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of myhousingmarket.com.au. Welcome, Andrew.
Hi, Michael. How are you?
Good. Now, these credit figures show what happened over the 3 months to August. So we're looking in the rear vision mirror, but let's discuss what these figures showed first, and then we can look forward to.
Well, it was predictable results in a sense, Michael. I don't think we were ever expecting another strong result month on month as we had in July. The August numbers were higher. In a way, they validated or consolidated what was a very strong July. No surprise, we've seen house prices increasing. There's no doubt that the housing markets are reactivating. I think also we should mention that banks are still pretty wary in terms of their lending outcomes. So there's still a way to go to, I guess, get the banks back to what I would call a normal view of risk in the housing market. But we are seeing more loans being approved, more demand coming through. And of course, that's been reflected on the ground with higher clearance rates and models of house price increases.
Well, lending commitments to households rose 3.2%, just to put some numbers to what you were saying, rose 3.2% in August, and that followed that big rise in July, 4.3% rise. But Andrew, it's coming off a really low base.
If we look at the total lending, that includes investors and owner-occupiers, that was up 2.9%, Michael, over the month, but down still 15% over the year so far, compared to the same period last year. Now, owner-occupiers were up 1.9%. They're still down 12.2% this year so far compared to the same period last year. And investors actually, as you said, had a better return versus owner-occupiers over August, up by 5.7%. But of course, the real downturn in lending has been to the investor part of the market, and they're still down. Investor lending is still down 24.2%. this year so far compared to the same period last year. So loans are rising, Michael. Investor loans are up, but it's coming from a very, very low base and still well behind where it was a year ago.
Well, we've spoken before in these weekly Property Insider chats that it's going to take the investor market to push the general property market up. And the graph you're showing us now shows that it's different state to state, and New South Wales and Victoria is where the bulk of the investor lending has occurred.
Well, that's right. I think it's interesting, Michael, when we look at local market share, and that graphic shows us the local market share of investor lending compared to total residential lending. New South Wales, Sydney market is still the favoured market for investors. Of course, that proportion, that market share is well down on the 40% plus numbers during the peak of the Sydney market boom. But nonetheless, Sydney-siders, New South Wales investors still take a larger share of the lending market than any of the other states, followed by Victoria.
Just clarifying the figures that are on the screen at the moment, Andrew, you're suggesting that the figures are market share as opposed to dollar value?
Well, that's right. They're obviously based on dollar value, but it's total dollar value of loans in the local market and what proportion of that total market value for residential lending that investors held. And in New South Wales, of all the lending in New South Wales, 31.8% was the market share for investors. By comparison, 26.9% of all residential lending in Victoria was for investors.
What concerned me was that construction-related finance approvals were a bit more mixed. It actually is down, and that fits in with what we're seeing happening with building approvals as well.
Well, that's right, Michael. And this is the whole point when we talk about the implications for the general economy. It's jobs come from construction, particularly residential construction, and that's really now heading for a significant trough. And there's no real early signs, as you said, that there's even starting to bottom out. And that's validated again by recent approvals data for residential building, and that still is falling away. And I think, again, it's not just lack of demand from those seeking loans for new building, but it's also some still trepidation from banks to lend into that market segment. And as I said, it's going to take a while, I think, for banks to normalise their view of risk.
So I guess the main point is there is a turnaround driven by both owner-occupiers and investors, but it's coming from a much weaker starting point, but it's pointing in the right direction, Andrew.
Yeah, that's right, Michael. And look, we are well behind where we were at the peak of the market. So those that are predicting booms and bubbles and all the other nonsense need to take a bit of a cold shower and realise we're in the depths of a nascent recovery in this in this sector, and it's going to take some time for it to get back to where it was. Look, some positive news, however, out of the finance figures, Michael, was some strong results for first home buyers, particularly in New South Wales. We had a very big number of first home buyer loans approved. In fact, it was the highest number since the end of 2011, where there was some stamp duty changes. So first home buyers are certainly taking advantage of better lending conditions and lower prices. And hey, that's a good thing for market access and for those that are now realising the great Australian dream in New South Wales, at least in the biggest numbers for some time. I guess that puts paid again to a lot of that negativity in regard to housing affordability and access into the marketplace. So I think that was the brightest news that we had out of the figures, was some better results, particularly in New South Wales, for first home buyers.
Great. So let's catch up once a week and have our regular Property Insiders chat and have a talk about what's happening in the market. Thank you for your time.
Absolutely.